I'm here in LA with Andrew Chan.
How's it going?
What's up, man? I um I love LA. I think I was trying to think how many times I've been here. And I think it's like either 6 or 7 times, which 6, 7, shout out. But it's literally like it's been I can't remember if it's like five and one like faded memory or something like that. So whatever. I love LA. I think it's incredible. I just love talking about geography and
Yeah,
traveling and stuff. So I
absolutely.
know this is the energy podcast, but it's like this is the second most populated city in the country, and no one talks about it the way they talk about New York, Chicago, New Orleans, whatever. And I just look at it; it's beautiful.
Yeah, a gorgeous day. Sunset's coming in.
Yeah.
And it's funny. I mean, from an energy side, too, it's one of the bigger oil and gas hubs that you'll find outside of Texas,
Yep.
too. And no one ever talks about that in LA.
There's the classic like photos, black and white photos of
Yeah.
all the big rigs, the wooden rigs, and those are either from like Beaumont or LA.
Yep.
And it's like wow, like when you learn that, it's kind of mind blowing.
Well, it's become such a niche part compared to the Hollywood ecosystem and the emerging space ecosystem. But people kind of forget there's still a lot of energy that comes through this basin.
Yeah.
Um, anyways, man, good to see you. First 6 times in LA. The first time you came by to hang out. That's a little betrayed, but it's
Hey, I
okay.
don't think I knew you, but to be fair,
Yeah,
I
back in the
think
day,
I think it
yeah,
was 2 years ago, probably the last time I visited. So
yeah, 2 years ago. That
yeah,
it may have been before we knew each other, but fair enough.
there you go. And then the West Covina story, which is just super down the like San Gabriel Valley.
Yeah.
I always want to say down the valley, but the valley is another valley. But then
You can call it. It depends on which valley you want to call it. There's
there's
San
like
Fernando Valley.
millions of people
There's
in
San
this other
Gabriel
valley.
Valley. Yeah.
But it's like no, this is the
Yeah.
valley, and this one is a different name. So whatever. Everyone has their weird naming conventions. But my stepson lives like an hour just dead east, essentially. His he has like his real dad is down there, and
Okay.
then his he has like half sister and other family down there. And I love it down there.
Yeah.
It's very random. It's just like it might as well just be like the suburbs of Houston or
Interesting. I was gonna say it's like China Light, but that's how
China Light.
yeah, I
Yeah.
go out to West Covina. I used to when I lived in Pasadena, I would go out there almost every week to get Chinese food. In like that area, Roland Heights, Hacienda Heights, like that's the best Chinese food you can get in the entire state, probably.
Yeah, I'm actually staying in the area, and it's reminding me of like Chinatown in Houston, but like
Yeah.
for miles, and it's really cool.
Oh
And
yeah.
I mean, I just had like one of the best ramen places in my life, which I'm not going to name drop because I don't know the name of it, so sorry.
All right. Fair
But
enough.
I'll pull it up here,
Yeah,
editor
I'll
Jacob.
send you some links for soup dumplings if you're
Oh,
jonesing
perfect.
this evening.
I love soup dumplings.
Yeah,
So good.
that's a big weakness of mine, and
Yeah.
it was a long exploratory process in college back in the days, man.
Yep.
That makes a ton of sense. That's good fun though. It's a fun part. Not everybody goes out there, and I think most people who hate LA, they don't actually know what LA is. They'll go to Venice, they'll go to Santa Monica, and they'll be like, "Wow, I don't like all of these like super rich white people," for lack of a better way to put that. But like you get outside of the core parts there, and you can find every culture, every ethnicity, every type of food that you would ever want in the city. You just have to be willing to drive long enough to find it.
Yeah. Which is
So
very similar to
yeah,
Houston.
yeah,
You'll hear the same talking points. Like it's diverse. There's all kinds of ethnicities and restaurants, and you have to drive across the city for like an hour to get to another place. That's all Houston talking points, and they're very similar. And it goes back
yeah.
to the oil thing we were
Yeah,
just talking about.
yeah.
Like no one talks about how similar they are. It's crazy.
Houston's a much better designed city. The loop system, for as much as like people hate on the traffic that you get there,
Yeah.
is far more effective than the 50 or 60 miles I sometimes have to drive to skirt around different parts of LA. Uh, hopefully they'll fix some of the infrastructure and the metro might work by the time the Olympics comes in, but I'm not
Oof.
that convinced.
That's the other thing. I don't even have like a known public transit train as the second largest city. Meanwhile, New York and Chicago, it's like better than driving, right? You don't even have to own a car to live there.
Yeah, I mean, metro exists. It works sometimes. LA Metro is not the worst public transit system I've been on, but it's definitely up there with like Denver as like really needs some TLC.
It could be there,
Could
right?
be there.
Exactly.
The bus system's actually really comprehensive, but that doesn't solve the fundamental issue, which is getting stuck in traffic because you're on a highway.
Right.
Yeah.
Yeah, these cities they build an awesome bus system, but they share the lanes with the traffic. It also needs a dedicated bus lane, but that's why trains are on rails and you don't have to worry about them. They go underground or whatever. But anyway,
not what we're supposed to be talking about today.
you're getting me. You're
Yeah,
having me
we're
act
on
up about my geography nerdism. But let's talk about energy somehow.
energy. Yeah,
So,
energy somehow.
your first title, I would say, is venture capitalist.
Yes, completely.
All right, so we have a venture capitalist here in LA, one of a million.
Actually, not as many in LA as you would think, but
Okay.
in the world, yeah, there's like 8,000 venture capitalists broadly. Of those, the number that invest in energy is probably like sub 10, maybe, if not lower than that.
You said 8,000?
Yeah.
Enough to count.
Yeah.
Relatively.
Yeah.
And then how many in energy?
Like 10.
10 people.
Yeah, 10 people. Like, I mean, you can
You're
start
one
naming them
of
down.
10 people in the world.
You've got, what, like David Forsberg, like Jim Thorson in Colorado. Whatever that fund was in Houston that went out of business that you may know the name of.
I have probably heard the name a million times.
Yeah, it's
I probably met him.
It's a small set, and there are some people who will touch energy. I'd say I fall more into that category of like, look, I'm not looking for oil and gas technology specifically, but I've invested in the space. I'm an investor in Collide, very proud investor in Collide, and I still look for a lot of things that are energy adjacent, very relevant to that sector. Where the first deal I wrote out of when I'm in the process of building my current firm is a company doing RL optimization for microgrids. So still very much around that space, that sector, without necessarily getting into oil and gas tech itself, because a lot of people lost money that way.
Wow, that's crazy. I did not know there was. Now I said enough to count for 8,000, but literally this many.
No. So you start going down the list, and you're like, well, okay, I know that guy. Met a couple others. All right. So this entire office, it's one of these like art studio offices because we're in Venice. We're not in like. And also shout out to our hosts for today, Ion Pacific. I was gonna give a quick pitch. We won't do that.
Here's their website.
on the link. But no, it's like we're in Venice. Even the normal VC offices, like my old firm Riot, is across the street, but they're in a converted house. Like all the offices here are kind of funky and have funky vibes.
I love that. Kind of like the show Silicon Valley.
Yeah,
where they're literally in a house.
Yeah, that show. So if I had to be honest with you, Silicon Valley is like the single most accurate representation of venture capital that like exists anywhere online. And the reason for it, you boil this down, you go through the first season, you're like, oh, wait a second, that's Peter Thiel, or supposed to be Peter Thiel. It's Peter Gregory, right? And then there's like I still remember I was watching this like episode 6, some random Indian guy shows up, and you just know it's supposed to be Vinod Khosla. There's no reason or explanation behind it, but it was very much token throwing in like these characters from real life Silicon Valley. Like there's the guy who's supposed to be Mark Zuckerberg. There's the guy, the Tres Comas Tequila guy, who I don't know who he's supposed to be, but like I know he's supposed to be someone. And until you get to the later seasons, it's just a very realistic representation of how things used to work. Issue being, they need like a 2025 version of Silicon Valley. It's not as relevant as it used to be. You don't go to Sandhill Road and like, shake down the VCs until the money falls out. You used to do that though, and then COVID hit and everyone's on Zoom now, so it's not as much fun.
What about the strippers? Next question. What about the what about I love the because actually I did start rewatching it because I'm in startup world and I was like, holy shit, is this accurate? Did this age well? And thanks for confirming that because wow. So I'm very eager to get back and rewatch it. I never finished it originally, but there's a kind of a trope in the beginning where these people get contracted and then they become useless and then they hang out on a roof and barbecue and drink beers all day. Like, how accurate is that?
Yeah, I've seen that one or two times. I mean, the show in general, it's like, even to answer your question on strippers, like adult entertainment and venture capital have gone hand in hand since the early days of doing business deals over scotch and whatever you need to do to bro out with the right people. Realistically, one of the things you learn very quick when you're in venture is you meet people where they want to be met. And if somebody says, not that I've personally done this, but that you are going to a strip club on some night, or you're going to Hooters, or and this is a real story, when the former COO of Collide said, we're going to a karaoke bar in Midland, Texas on a Tuesday night. You go to the karaoke bar in Texas on a Tuesday night and you start singing, right? Like
Taylor Swift, by the way.
Yeah, it was.
Killed it.
It was great. It was a great night. I have fond memories of that.
Rate the new album right now, 1 out of 10.
2.
Based.
No, okay, look, the new album, if you have to break this down, I've been a lifelong Taylor Swift fan. You know, I going back to the first album release. And for this in particular, the lyrics weren't that good. Melody felt canned. And like, did any of us actually need a 3.5-minute song talking about Travis Kelce's, I'm trying to think of the word to describe, redwood tree?
On brand, okay.
On brand, yeah. But no, not great. But that's to say, like, one of the more useful skills in venture broadly too is also having good pop culture knowledge, having good sports knowledge, because your job is to relate to people. You are a service provider, whether that's to your portfolio companies, to your limited partners. And because you are providing a service, you want to be good at providing a service. Usually that comes from building personal relationships, which is easier to do if you're like a real person with like interests and hobbies. Not everybody does that, but that's...
I mean, you literally portrayed it. We're talking about TV shows, music.
Yeah, we're running through the full set before we get to talking about real world topics.
If I didn't mention like your title so far, they would just think we're like try-hard comedian podcasters.
I would love to be a try-hard comedian podcaster. There's nothing I want more in life than to be like a fashion influencer in LA, but it's like just you dressing down the entire time. And then you like, your entire idea is like you're making jeans and t-shirts cool again, you know? Anyways, that's no, I completely agree. But there's like an art to what I would call this first 10-minute segment or so of like shooting the shit, which is a very important part of VC. It's a very important part of sales in general, actually. And if you really boil down what venture is, it's just the highest level of sales, because you're selling to LPs, you're selling to founders, and you're a service provider.
Cool.
Yeah.
Let me knock out some real dumb questions. Which is a slogan of this show. Can you explain to me, so I hear this a lot, and I've come to learn it from being forced to, or Googling it, or ChatGPTing it. Can you kind of run down like the series of gaining money that companies and startups go through? Like seed rounds from Series A, B, C. Yeah. Can you just like start from like having a good idea, maybe a small community, and just starting there to like boom, 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 billion-dollar company?
Yeah, so, and what I will tell you broadly, venture capital round names are made up, right? The stage that your company is whatever your investors choose to call it at any given time. So usually an idea on a napkin is what you'd call a pre-seed, right? Sometimes people will raise money at a pre-seed. They will, get that $250K from Y Combinator, use that to build out their MVP. Most normal people cannot raise money at that point in time. So they build something, get some early customers, early traction. That's what gets you to this seed round. Now, here's the problem with that, though. I've seen seed rounds that have been raised with, $300,000 a year in annual revenue, a team of 5 people, fully built out MVP, ready to scale to market. I've also seen seed rounds that are like, oh, we haven't formed the company yet. We're raising $5 million at a $35 million pre-money valuation. And you're like, great. Well, I'm not going to do that deal, but it's very nebulous. And then you start to get more concrete milestones after that, where like a Series A, usually you need $1 to $2 million in annual recurring revenue if you're a software business. If it's hardware, obviously more complicated. Series B, we're starting to talk like the $4 to $8 million in ARR. Series C, whatever makes the discounted cash flow make sense for your $100 million round, but you have to have real metrics that then at that point in time get underwritten in these more complex financial models. It looks much more like a banking or a PE job. Whereas in the very early stages, you're like, well, I don't know, I kind of like this guy. Here's the check. And so that's where the round stage is, like you grow quickly in revenue. You have to keep growing that revenue to IPO. But again, some people choose not to IPO. You're seeing that a lot more frequently now where people are staying private for longer. That's causing liquidity issues.
Diamond hands.
Yeah, but it makes a lot of sense to do it if public markets aren't going to react well, or if you think there's a recession incoming, which we can debate that forever. I'm not an economist. This is not financial advice. I am not a registered financial advisor.
They're in the bottom for you. So you must have a very deep nihilism about life, which is which is a theme on this show. I love to talk about. You know, when you talk about energy, you get in like energy poverty and what's the point, yada yada.
Yeah.
I mean, when you see money, the way you see money transaction flowed, whether it's counting or you predict its future of just completely, you see billions burning. Like, you must just think like, what is literally like money? What is the point? Who am I?
I wouldn't go that far. And I mean, like, look, I think for me, and the reason that I work in energy, right? And my entire broad level thesis as an investor for both my angel investments, for the firm that I'm currently building, is about, investing in real technology that solves real problems for real people. And that means I invest in hardware, applied AI, but not in like a LLM wrapper way. And, connected devices, focusing on energy, agriculture, manufacturing, supply chain logistics, things that affect the lives of the 99% of America, not just the people in Silicon Valley. It's funny how that works sometimes. And for me, that belief is built on this concept that, like, look, historically, venture capitalists, I just think they're bad at their jobs. VCs are bad at their jobs. They don't know what they're doing. They invest in technology that doesn't actually work or doesn't solve problems for anyone. And that you don't have to light cash on fire like people do, but people are bad at their jobs, and so they light cash on fire. And so I'd actually say I have a healthy dose of optimism, but it's an optimism that we can shift how people are operating to invest in more tangible products, more, actually revenue generating ideas, instead of chasing down, hypothetically, not that I would ever call a company out on a podcast, but tools that help you cheat on everything or something like that, and I think we can get there as an ecosystem. It's just, I think that's the sort of problem that might take my entire career to try to affect 10 to 15% of. So healthy dose of optimism. That said, you do start to realize that nothing matters unless you have billions of dollars.
There it is. Thank you.
Yeah, there we go. But if you have billions of dollars, you can affect great change. And so that's my challenge to all of you billionaires watching this podcast.
Shout out.
Chuck Yates.
he never hit it. Sorry.
Yeah, I know.
Keep dreaming.
Someday.
He's open. So let's talk about risk.
Risk.
I just met this. I had lunch with this. I guess he was just like an investor in general, and like he is invested in like restaurants and like entertainment places for families, but also just like into energy and like very grandfathered in things. What would you call it? Just like low risk, basically stuff. And it kind of seems to be at the point where like he can kind of just do whatever the hell he wants. And, and we all have dreams. It's like, oh, I'm gonna invest in an S&P because that's safe. But then also when I hit a certain amount, I want to help my sister open up her food truck. So it's like, how do you, and like that's a risk, right?
Yeah.
So what does like your portfolio look like? Generically, unless you want to actually say names or whatever, like.
No, I'll happily say names. I think most of my companies know where they fit in a risk management cycle for me.
Risk management is the topic, basically.
Yeah. So,
describe that.
And I look, venture capital portfolio construction is completely a risk management game. And there is only one correct way to do risk management in venture, which is to correctly diversify and take different types of risk. For me, I use what you would call an expected value approach, where I look at every company, I say, what's the probability of whatever outcomes I would expect here? And how big are those outcomes? And then try to maximize that set and then also diversify the different types of risks. So for example, Collide is an AI business. A lot of the customers are oil and gas centric. The biggest risk is probably on the customer side, that if oil prices go negative again for a year or two, we're going to have to pivot or figure something else out. Hopefully not, because I think there's a lot of other stuff going on that you can do there. But that's like a very like customer market driven risk, right? And the way you diversify that is then you do some you either do other sectors, right? For example, like, I'm an early investor in a company, Noteworthy AI, which is a different side of the energy coin. They do inspections for power utility poles. That's pretty much market proof, but it's just a slower business, and it may not exit at quite the same value. I hope it will, but probably not a $10-20 billion business there. Now, then you get to have a little bit where you're like, okay, but you also want some things that are really high risk, really high reward, and that if they work out, this will be $1 billion business, not just billion, but $1 trillion business. And so I'm invested in a company, Auriga Space, which is effectively building a railgun that launches stuff into space.
Hell
And
yeah.
yeah,
I've seen so many YouTube videos about that, and it's coming to life.
and it's so sick. And it's, you know, it's going really well. They've closed a good amount of capital. There's massive science and technology risk. There is no market risk with that business. If that works, they're going to corner the space launch business. Falcon from SpaceX is out the window, right? Now, it's not high odds that that works, but it's a risk you can take in that portfolio construction because you have safer bets, you have medium safety bets, and they're all exposed to different types of risk, where Auriga is actually more like government risk.
I was about to say
regulatory. And then a little bit on just like engineering of like, can you even physically do this?
Hold on, do they have like a proof of concept that's done, or is it like an animation?
I don't know if I can legally answer that question.
If I just go on YouTube to put it on the edit right now, will I have something to show to fans?
I think we'll find out, and we can jump cut to that if it exists.
If not, I'll cut to like Looney Tunes or something.
But no, so it's like those are all examples. And then as an angel investor, and when you're doing individual capital, like that's the way I think about portfolio construction from a fiduciary, because it's just as important not to lose my investors' money or to underperform other assets as it is to make great returns. And I'll tell investors, I'm like, look, I'm not the type of person you put money into if you want a 50x fund. I am instead going to promise you that I will do my damn best not to make sure I return anything below the top 25% of VCs, which is at about a 3x. And that's something that not all VCs understand, where if you're whaling checks into just pure play AI businesses right now, we get down a year and a half from now, AI bubble bursts, you're not at a 3x, you're at a 0. And for me, for the investors that I work with, for the people I care about, it's more important that I never end up on that side. And if I miss a 50x, that's okay, because that's part of their portfolio construction too, and where I sit in their portfolio. Now, on the flip side of that, when you're a personal investor, like, and you start to get more and more money, there becomes an amount of money you're just willing to like set on fire because it's fun, right?
There it is.
And I have a couple of those checks. My favorite is a company called Barrel Room. They're actually based down in Torrance. And what they do is they age brown liquor overnight. So they produce tequila, rum, and whiskey.
In one day.
In one day.
Which it usually is
8 to 12 years.
Wow.
And it tastes really damn good. Business is doing great. Was that a responsible investment? Absolutely not. I know nothing about consumer. I know nothing about alcohol or alcohol brands, although I know a lot more now. And the company was 3 people. 2 of them were part-time. The part-time CEO lives in the Cayman Islands and is the full-time CEO of a publicly traded drone business.
Cayman Islands raises red flags, by the way.
No, it's tax purposes. He's done well for himself. He's a very good guy. Very, like, it's all above water, but it's the sort of thing where you look at that as an institutional investor and you say, there's no way I can, like, the risk profile on this makes no sense whatsoever. As a personal investor, I love the guys. I love the product. I said, fuck it, I can lose this money. I'll write it off. And so I put in a check. And like, that's what you do. And so that's where if it's like your family's food truck, for example, and you want to support their dreams, which is a good thing to support people's dreams. I'm not saying that's a bad thing. I'm just saying that has to be money you're willing to lose. Versus if you're a fiduciary, you have to act in a very different way, where maybe you have a portfolio of food trucks you're investing in, and that's one of them. If that's a thesis that you hold and you think you can generate good returns and can show that, I will tell you, investing in restaurants is a tough, tough business, and most people get royally screwed. And the reason you do it is not because you want to invest in a restaurant. It's because you want to own a bar and like bartend. And like, I do have dreams someday of, you know, investing and operating a artisan tea shop in Los Angeles.
Yeah.
I don't think there are enough of those, but that's, yeah.
No, I love that stuff.
Yeah.
Let's do a speed round vocabulary.
Speed round vocab. Yep.
Venture capitalists. So let's actually compare venture capitalists to angel investors.
Yes.
Is there a difference?
Yeah, completely. No, angel investors suck at their jobs more than VCs do. And angel investors are people writing, let's call it, and look, there are super angels, so all these things we say it will caveat it effectively. But angel investors will write, you know, anywhere $5,000 to usually $25,000 checks. That's a typical angel check size. They invest at the early stages. Sometimes they invest in what are called angel syndicates. I have yet to see an angel syndicate that has performed anywhere above a 1x, which means that every angel syndicate loses money. It's a call out. If you are in one of those, you should probably get some formal investing experience or deploy money elsewhere. unless, of course, again, that you're willing to light cash on fire. Um, venture capitalists are people who manage money on behalf of LPs who are limited partners. And venture capitalists will raise funds themselves. So they'll go and they'll collect these. Sometimes they can be $25,000 checks, but usually the 100,000, 200,000, multi-millions in some cases checks from people. And they will manage that money. They get paid a management fee to manage that money. But they also then have to return that capital. They also get paid in terms of upside. It's very different where if you're angel investing, it's just your money. And you either get that money back or you don't. And so venture is a much more complex game. There's a lot more rules and regulations around it. Angel investors, if you're accredited, you don't have to worry about too much as a VC. As a VC firm, you have to worry about a whole lot of regulation. Increasingly more. Actually, not increasingly more in the current. We'll see where the winds blow in the next few years. But yeah, those are the sort of the main differences. Usually venture capitalists train for, years and years before they launch their own firms. Even sometimes they never will, right? And so you'll do investment banking for 2 years and then you just like go die at Insight and are never seen again.
So what about an investor? Just the blanket term.
Anyone who, so there's accredited investors and there's non-accredited investors. So an accredited investor is if you're making $200,000 a year or your total net worth, including property holdings, I think it's combined between you and your spouse. They've got some strange cutoff. I think it's at like 3 million right now in total net worth. Or you hold a Series 65, or I think there's like 3 other certifications you can get to do that. Have not done that. Fun fact, if you are employed by a venture capital firm, that's not actually something you have to go through. Interesting workaround. But all of that to say, anyone can be an investor. Anyone can cook, to flash to the Ratatouille clip.
Disney's gonna take down that video real quick.
Oh yeah. But it is like anyone who writes a check can be an investor. You don't have to write a big check. I have written my very first check I wrote into a venture-backed startup, because there's certain exceptions you can get around on accredited investor rules, was $500, right? I am on that cap table. I am next to the guys from Founders Fund, so one of the biggest funds in the United States, and the former CEO of China Minmetals.
Wow.
And I'm sitting there with $500, and I'm just as much of an investor of that business as they are. And frankly speaking, it was a much bigger part of my net worth at the time I wrote that check. But that doesn't matter, right? Anyone's an investor if you write the check there.
Yep.
Which is also why you see a lot of people on LinkedIn who will call themselves investors. Different credibility levels of investors.
I see lots of people say lots of things on LinkedIn. if your title is over, it's like Twitter. If you have over 144 characters.
Yep. Oh no,
can't do that.
I think anybody who lists more than 1 or 2 things in their job headline, I instantly ignore that invite.
It's good advice. It's just vibes wise. It's just like, okay, like we get it. The worst is when you have a bunch of things and you actually do all these things, whatever. You're not just like visionary. You're like literally listing things you do on a daily basis. But then you kind of just describe the roles, but you don't actually say the name of the company.
Yeah.
So like, I'm the editor for this podcast and all the other shows for Collide, and I have to look these things up, and I'm like, okay, where do you work? And it's like, okay, they're present. It's like blank year to present on LinkedIn. On like 10 companies, this is like usually investors too, right? Because they're actually involved.
So yeah,
and then it says all this shit, and then it's like, I don't know where you work.
Can we just talk for a second? I hate that investors list that they work at each individual company. You should put your firm and then you list your investments under the firm on your job description.
I like that too.
It makes so much more sense, and then you don't have to scroll through the whole LinkedIn. Like you can look at my LinkedIn, you look at the firms I've worked at, the deals I worked on, the boards I sat on, and you can be in and out of my LinkedIn in 2 minutes. And there are people who you will like, especially the longer and the older, this is usually guys in their like mid-50s, 60s, and you're like list down, and they've got 50 or 60 portfolio companies. You're scrolling down, you're like, dude, I just wanted to see where you went to college. Like, I don't need to see this.
Dude, yeah.
Like,
yeah, right on. I don't want to get in the weeds with that because that shit annoys me a lot.
That is funny stuff. But LinkedIn etiquette is like something I would love for us to like fix, but it's also why I think we're going to get rid of LinkedIn. It's verticalized unbundling of LinkedIn.
RIP. I'm one to talk. My profile is literally like unhinged, and I just do whatever the hell I want. But at least you can tell where I work and what my job is.
Yeah.
Let's wrap up this vocabulary round. Fiduciary.
Fiduciary. I don't even know how I'm going to describe
They're
that.
like they're like someone who works with money.
Yeah,
with,
it's someone who is trusted to
like a
make
third person.
financial decisions. We should look up what the technical definition is because I actually don't know.
Okay.
I know what a fiduciary responsibility is.
So I'm guessing you can't spell it because that was the next question.
I could probably spell it.
I think
fiduciary
douche is in there.
involving trust with regard to the relationship between a trustee and a beneficiary.
So they're like a third party person.
Also, in
like
the
escrow?
case, like, and this is the reason why it's like kind of tricky. In venture, you use that to say like that's between an LP and a GP, right? And you have fiduciary responsibility between the LP and the GP to manage money and to manage money in the best interests of that person, which is you can get sued for if you do poorly. Now, granted, nobody actually files those lawsuits. I wish people filed more of those lawsuits for breach of fiduciary because like I've seen some dumbass shit. And like I like every person who invested in Cluely, like my God, you should get sued for breach of fiduciary. But yes, it's I guess it's the legal definition is a little bit dicier. Fiduciary.
Whoa.
Okay.
And I can't believe you knew the definition off the top of your head because I just happened to cut to like B-roll of like flowers in a meadow when you said it out loud.
Well, it's like, look, and this is something you start to realize. There's a lot of acronyms in venture.
And oil and gas.
And oil and gas
and,
too.
Everywhere.
Everywhere. People love acronyms.
In
People
LA.
love terms. The straight legal definitions and then the definitions in context are often different. And so it's good to check those things before. I'm a big believer in, as we'd say, checking oneself before one wrecks oneself. And so
I think Mozart.
Yes, I think that's a Mozart quote.
All right, one more word.
Okay, one more word.
And this is back on track. AI bubble.
AI bubble. Okay, so I am a huge believer right now that venture capitalists especially are throwing money at dumbass shit. VCs love to invest in dumb things. VCs love to invest in hype waves. What VCs do not love to invest in are things that make real money. And so when you look at AI right now, it's not a fundamental issue with like OpenAI or Anthropic, although to be fair, those companies are burning a metric ton of money and I don't know when the margins will improve. Separate issue for a separate point in time. It's an issue with all of these like very low effort AI wrappers that have gotten millions and millions of dollars thrown at them and are producing what I would call AI slop in a lot of cases where they're producing bad products that are undifferentiated and that have no moat to win. And it reminds me a lot of the dot-com bubble, which is why I say AI bubble. I obviously, if you cannot tell by the many gray hairs I have, did not live through the dot-com bubble. A lot of my mentors did, and my close friends were investing during that era. One of my advisors is this guy, Tom Baruch. He went through the Climate 1 bubble, the Climate 2 bubble, and we are now in probably the Climate 3 bubble, right? And so, but you have these battle scars, you look at the reflections, you're saying, it's not that there aren't companies that will not make money, right? Amazon is a dot-com bubble company. eBay, same era. Google, you could even argue, same era, right? These are all huge businesses. The thing being, there's so many businesses that aren't going to make money that the net is, if you're investing in the space, you're probably going to lose money. If you're just not being intelligent, you don't have a unique thesis, a unique outlook, and you're saying, oh, I want to invest in like jobs with AI, right? I think that that's a massive bubble. And then the other fundamental issue, and this is more of an issue with like later stage businesses, models, a lot of the valuations, and I harp on valuations. Not a lot of young people talk about valuations ever. I'm a stickler for valuation, but the valuations are being predicated on either AGI or like massive model improvement to decrease cost. We're not going to get there. Like we are almost at the limits of what OpenAI can do. If you've been around the platform, I started using, and this is actually a fun fact, I started using GPT when it was GPT-2.
Oh.
So way before the public website launch, we were using it to try to train in college, a bot that would write short stories like me so that I could get out of doing work in English class. It was really bad, like incredibly bad, so bad to the point that like none of us really gave it second thought because we didn't really see how it could get better. Since GPT-3, we got a lot better with GPT-3.5. We got a lot, mostly better with GPT-4. The difference between GPT-4 and 5 is like not that big. It's pretty marginal. And we're getting closer and closer to this like logarithmic scaling instead of exponential. If you're betting on exponential, but the reality is logarithmic, then you're going to lose money on valuations because that's how life works. And so there won't be massive improvements. AI is not going to take everyone's job. Your job will be fine as long as you're doing something that like a human actually needs to be doing, and you're not like sitting and copying and pasting stuff from one form to another form.
As Chuck Yates in our community likes to say, AI is not going to take your job. People who know how to use ChatGPT and AI are going to take your job.
Probably. I think that I've actually never heard that. I missed a couple podcast episodes.
Well, he said it about 5 times, and I roll my eyes at this point when he says it, but it is true.
Yeah, no, it is, and it's also jobs evolve, right? And things change over time. And look, the internet did not take like there are not less employed people now than there were back then because of the internet. It's just new jobs evolve out of AI. I'm a big believer that I think like creatives have a much better place and positioning because AI cannot be creative by at least in the current structures. Algorithmically, AI cannot be creative. And so, if you're an artist, if you're somebody doing something unique writing wise, you may be actually better positioned than some of your peers who spent years doing coding or data entry, which is supposed to be more technical but isn't. But yeah, hardware creatives.
Yeah. It's crazy. Me and the stepson were walking around a grove yesterday, and 12-year-olds, they'll just start saying something out of nowhere. So there was no build up to this, and he was like, "I heard, or like he was asking me, what do you think who's smarter, AI or humans?" And I was like, and I think he might even mention like ChatGPT specifically, and I was like, ChatGPT is humans.
Yeah.
Everything it knows is human stuff. It can't create its own thoughts, and it's so interesting and precious to see what the kids, especially a 12-year-old who can like what they're seeing as we're seeing at the same time. And I'm like, man, like he really doesn't like understand or hasn't put thought into it. But
well, the highest level issue is nobody knows how it actually works on the back end, and I posted a video about this on TikTok. It flopped. It's like one of my worst performing videos where it's 7 minutes of me walking through algorithmically how transformers predict the next word to send back to you. And what you eventually realize, though, it's a complete the sentence engine more than anything. It's a complete the sentence engine that is trained to be the average of the person on Reddit right now because it's trained over the entire internet, which means you're going to become the average of the person on Reddit. But it's the equivalent of that person if you have unlimited time and unlimited access to the internet. Even with unlimited time and unlimited access to the internet, I'm not going to let somebody from Reddit perform surgery on me, right? Like stuff like that. It's interesting. But on the flip side, you think about your average high school student, and you're like, yeah, I probably will write a better paper than 9 out of 10 people. I went to high school in, Metro Denver at public school. It would write a better paper than 9 out of 10 of my classmates for sure. Because half of them were just like copying and pasting shit from the internet to start.
Exactly.
Like, it's just
oh god, that just hit. I didn't even think about that. That's hilarious.
No, so that's like when you say, is it smarter than these people? I mean, like, in some people, sure. But
he hit me with like that.
Yeah.
That like I was like, whoa, hold on.
Yeah.
I mean, I answered it quickly, but then I've been thinking about it for 24 hours.
Yep. Haunts you, man. But no, and then as you think about the energy problem too, and if we're on this vocab of AI bubble, if you want a fundamental issue, it's the energy cost is so high right now that will be a rate limiting factor for scaling until someone figures out a way around it, which is, frankly speaking, about as realistic as a railgun to space. It's not out of the question, but it's just like, you may get there, you may not find a way to make these models more power efficient. I view those as actually pretty equivalent engineering risk problems. Or we unlock massive amounts of new energy, which we could be moving in that direction. Like the deregulation on nuclear is one of the more interesting trends that I'm tracking. I never bet in spaces with regulatory risk because politics in this country are unstable at best, and you have a new administration every 4 to 8 years. Because that's just how politics work in the US. It's net positive that we do have elections and that we are democratic, but it also means that policies change rapidly. But if nuclear unlocks, that's one thing. If we start doing a lot more natural gas development, that's another. All things I'm tracking pretty aggressively as you think about AI in the long term. But at that point in time, if you're worried about the downstream AI companies win the smarter investment just to be in energy and energy related infrastructure because it will get used for something one way or another. And that's why I have that as a sector of companies I invest in.
Wow. Yeah, I mean, let's wrap this up with talking about energy.
Talking about energy.
Welcome to
full
Energy
circle,
101.
Full circle. Yeah. Welcome to Energy 101.
Welcome to the episode.
Venture Capital 101.
Yeah, so here, first, let's kind
Yeah.
of like rapid fire through
Yeah.
these sectors of energy. So what is your, and like we'll come back, so you can kind of, brief over these quickly. What have you actually invested in oil and gas wise, whether it's companies or the sectors?
Literally just Collide. And
Okay.
I have looked at a lot. In fact, I started in venture doing mining and oil and gas venture capital. That was what I was brought on to do as a consultant. I was doing 10 hours a week when I was still working at NASA.
You worked at NASA?
Yeah, I worked at the Jet Propulsion Lab, man.
Oh,
Walking
JPL?
around Flint Ridge. It's up there. Yeah.
Wait,
did you not
wait.
stalk the LinkedIn?
Are you President Mark Rober?
No, I wish. I'm friends with William Osman, who's the same network.
Really?
Guys.
Yeah, I love him.
Yeah,
Yeah.
he's a fun dude. He's a homie. I was doing 10 hours a week in oil and gas mining. Talked to as many funds I could find who would invest in oil and gas. Of those, I remembered. Montrose Lane, they're out of business now. So that was the only specific oil and gas venture firm I knew, with the exception of Ascent Energy. But David does a lot of oil and gas adjacent, not as much direct. And you quickly find out that oil and gas has been a black hole for venture dollars. Oil and gas is one of the worst, if not the worst place. Actually, I'm going to rephrase this because I'm saying definites. Oil and gas is the single worst place as a venture capitalist that you can deploy money. And it's because the customers have no control over their budgets pretty much, and they don't effectively adjust workforces. And software, hardware adoption is hard because it operates like mining, where it's a bunch of older guys who don't want to change their processes, because if they're making money now, why would they change to try to make more money? So adoption's hard to start. Once you get in there, it's easy to get churned, because if the oil prices drop, you're the first thing to go on the budget. It's just like a black hole of venture dollars. And so Collide is my only investment in oil and gas directly. I've done a bunch of other things in energy now, some of which I can talk about, some I have talked about, but like Noteworthy AI is doing very well. They're out on the East Coast doing grid inspection, grid maintenance.
So like utilities.
Yeah, utilities. Jules AI is doing grid optimization, so that's a little bit more upstream. I looked at a bunch of plays in Discovery. Couldn't quite get there on anything.
Like E&Ps?
Yeah.
Okay.
Looked at a fair bit along the like optimization of extraction and extraction processes. Again, couldn't get there. Looked a little bit into the supply chain side, realized that I was the dumb money and did not want to be the dumb money, and that the ways that oil moves around the country are unpredictable and confusing. So oil and gas is a horrible place to deploy venture dollars, and that hasn't gotten better. The tides haven't shifted where companies are better at adopting technology. So you have to find a place where the budget actually works. That's part of why I love Collide. Is like, for a while we were doing an events business, which is where the budget was at that time. As soon as the AI budget started opening, immediately pivoted. It's the right place to be in, because that budget doesn't change if you start laying off people on prices, because it's such a core part of the digital transformation that it will exist throughout, right? And so that's where, like, from a strictly energy side, I've looked everywhere, invested only very specifically, and this is not like me saying like gassing up Collide or anything, although obviously I'm going to toot my own horn here, but it's to say that like the reason most venture capitalists will stay away, the reason there are so few people who will play in oil and gas, and like I'm still open to it. If I found the right deal, I'd do it, because I'm not afraid of some of that risk and I know how to manage it because I've been around the block enough times. But it's because historically it's a black hole for venture dollars, because the startups will get in and they'll get churned. And if you get churned and you're in a bad venture fundraising cycle, you're dead. It's just straight zero. It's not an M&A, it's a straight zero.
Damn.
Yeah.
Spitting over here. I did tell you to brief over that, so can you re-say all that really shortly? No, just kidding.
No, but yeah.
Colin and just the company as a whole, we were like, officially it's like we're an AI company. Don't say we are an oil and gas company. Don't say we're an E&P company. Don't say we're a service company. We're an AI company. And I mean, obviously a smart way to go. The reason we say oil and gas here at Collide is because that's what our customers are. Yeah. They're an upstream, like specifically 100%. So there's room to grow in the future to like other sectors, but that is why we call it that.
Makes a ton of sense. And look, don't get me wrong. I love oil and gas. I love the oil and gas industry. I go down to Houston 2 to 3 times a year. I go whenever I get the opportunity to go to Midland. I go to Midland. I have a ton of fun in Midland. I fucking love Midland. I think people hate on Midland for no reason whatsoever. Like, shit, fucks. It's core America. Like, it's what I wanted America to be when I was growing up.
You're making all the libs mind blow in
Yeah.
California right now. I'm gonna censor this for their light hearts.
Yeah, I don't feel a need to censor this. Like, look, man, I love Texas. I'm not a wildly political person myself. I think there are great people everywhere, and I think oil and gas is far more important to the country than people want to admit. And it's far more important to an energy revolution than people want to admit. And so any road to reducing climate emissions is going to have to go through oil and gas at some point in time or another. You're also going to have to negotiate with all of the multi-billions of dollars that Chevron can throw to try to shut you down too, right?
Yeah, that because I'm on the same boat. You know, I grew up just thinking oil and gas bad, activist thoughts, yada yada, and then you're like, you kind of need both, and you kind of everything relies on it. And so I found a healthy balance, the same way you seem to. But let's move on to the other sectors. You know, so like you invest in oil and gas and you have good things to say about it, bad things, but like you're also, I'm assuming, supportive of other sectors. You live in California. Your mix is like probably the most diverse besides like Vermont or something when it comes to energy use. So like, what do you think? What have you like touched when it comes to renewables, like wind, solar, even nuclear?
So I'm currently working on a stealth project, which we don't have to edit this out, doing what I would call, what's the correct way to phrase this? Offshore exploration of minerals and mineral resources using applied robotics that will hopefully be live within the next year.
You're not talking about the metals company sucking up all those
No,
nodules,
fun fact,
are you?
I know those guys. I've known them for a while. I met Greg. That's how I got my first job in ventures. They asked me to pitch a Series B company. Metals company was at a Series B. If we'd invested in that round, we would have made so much money.
I just brought this up in this this last episode we just recorded this week. I don't know what order they're gonna go out, but the guy, he didn't know what I was talking about.
Yeah.
And I was like, God, like mainstream media has covered this. Like everyone's talking about the nodules being sucked up.
Yeah, no, Greg Stone, who's their head of ocean science, he lives in LA. He's a buddy. We're still supposed to get beers since I moved back. We haven't done it yet. On the list. Anyways, no, I actually, and look, they can come at me for saying this if they want to. I think that all of the polymetallic nodules companies are going to fail. Like, you cannot make money mining the ocean right now. You can do a lot to build infrastructure around that, to create a world where you can mine in the ocean, to also create offshore wind, offshore solar developments. I think that's much more short term, and then you can think about what the long term looks like. Look, so I'm working on that project. That's probably the biggest on other energy sides, minus I've done a lot in the grid, a lot in grid optimization. I think you see it. I mean, you down in Texas see this every year, that suspiciously the power tends to go out in the wintertime during certain weather conditions.
All I know is that I've yet to spend under $500 on my energy bill since I moved into my new place. So
yeah,
that's cool.
No, and same deal in California too, where energy grid is not optimized whatsoever. You have major fires every year, you have major outages every summer, rolling blackouts. That's a problem that I think is very short term and that we will have to solve if we want to just continue to use power. Because the grid's aging, we haven't updated it since the 70s, 80s in a lot of cases. So that's usually where I've been playing energy side, and then on the minerals. So I'm an investor in a company called Stratum AI. They do, for us technical geophysicists on the call here, Kriging modeling using applied AI models in a polar coordinate optimized.
Bro, you just said way speaking Japanese right now.
But so they tell you where to mine for what quality of minerals. That's
like, where is it, like rare earth minerals?
Ish. So they're on development stage projects. I looked at a couple of the upstream opportunities. You know, like I said, I probably could have made money doing this, but chose not to because I didn't think the models were that good. Doing like net new discovery of ore bodies. These guys will take an existing ore body and say, how do we optimize extraction for that? So if you're on a nickel mine, you're on a copper mine, and you're already developing it, you need what's called a mine plan to tell you where you're mining and then where you're sorting the minerals into what grades, so that you have the right refining. Sometimes you won't refine certain grades. So to optimize that, they do that with AI, and it improves the mine site's profitability by 10%. They capture 10% of that. For a $50 million a year gold mine, you can do the math. It's a pretty profitable business. And they just closed a Series A actually over the summer, so that's been killer.
Congrats.
I think those have been the two big ones out of like that I have personally invested in. At my old firm, I worked on we did 280 Earth, which is the Google X spin out doing direct air capture. That I should stop talking about because I may have legal limitations to what I can discuss. And looked at a bunch of other things. Builders was pretty deep into these older industry problems as well. And so looked at, battery storage, looked at doing the, more mobile battery solutions.
That's
Didn't
huge.
quite get across the line on those from just a margins and payback period perspective. It's a tricky business.
That's not going anywhere. That's
But no.
something we need.
Well, and the battery technology is improving so rapidly that I think that those will be great businesses soon. Whether or not if it's into my investment horizon is a different story. I do have one investment into a solid state battery company as well personally that I forgot about. And I don't usually bring it up because I qualify that as a quantum business, not as a energy business typically. And that is on the highest of high technical risk sides, where that's one of few instances of micro taking real science risk, where we'll see if it works or if it doesn't. But yeah, so I think that's usually where I try to play in the stack. I'm definitely not doing as much on nuclear. I think I'm a little bit less bullish than other people just because, again, I fear regulatory risk. I've seen a bunch. Oh, you know what? So the one other space I've spent way too much time in, and you can figure out how to cut this in, is
Fortnite.
Electric trains.
Oh.
Yeah. Spent a lot of time in electric trains.
What's involved in that? Like batteries or the rail?
Batteries. So we were investors in my old firm and at Riot Ventures in Parallel Systems, which is doing one approach. I looked very close, and sometimes I wish I'd done this deal into a company called Intermotive that does just electric engines instead of doing. Parallel Systems had each car electrified, so very different approaches to the similar problem. And then autonomous rail, I looked at a few solutions there too. I think that's one of the more niche plays, though.
You're kind of crossing into like a sector I don't even think people know. Like everyone assumes like these rails and modern trains are efficient, and they are like even autonomous and electric. Like we're not picturing like locomotives like busting out coal smoke.
They absolutely still are in some cases. Yeah.
I mean, that's logistics, but are you talking about like passenger train or?
No. I'm talking about like cargo.
Oh, so yeah, that does. So yeah. I would say from a layman's term, we are thinking old school. Then I am thinking of puffs of smoke.
No, it's a lot more old school than you think. I mean, it's not like wood-fired old school, but it is like you are not using an electric. Well, you might use an electric motor. You're not, battery powered. You're not recharging your train somewhere. Yeah. And it's one of the easier ways you can drive down cost of logistics broadly. It's, why go trucks? Trains are on a rail. You can make them autonomous much more easily. The regulations are pending. So this is, again, it goes back to the regulatory risk side of like, if a regulatory body doesn't approve, Waymos, for example, right?
Man, they're everywhere here in LA.
Well, it's like
I was in Austin for the last 5 years, and I thought that was pretty intense, but whoa.
Well, it's like, but you see what happens with that too. It's, Waymo hits one cat in a New York bodega and they may be out of the city, right? That happened like that. And that's one accident where if you think about how many cats cars hit every year, my God, like, come on. But it's just, it creates the wrong headline. And so all of those are regulatory risks I just don't play with. So nuclear's been a little bit tougher for me. And then I did look at a bunch of the fusion companies and did not get across the line on any of those.
Oh God.
It's just like, again, fusion's been 15 yeyears away for like 30 years.
Hey, it was literally, I think at post-COVID, they hit Ignition, right?
Yeah, that's the one that Sam Altman backed.
He did?
Up in the Northwest,
in
Seattle. They did, but like it's still not remotely close to being commercially viable.
I know, but you're talking about chasing a unicorn. They touched the unicorn there.
Yeah, you're starting to get closer and closer. I mean, look, we were investors in Colossal. If you want to talk about like a company that's cloning the woolly mammoth, you want to talk about like that sort of thing. Like you do take big swings, and that's part of the fun of venture capital is you get to take these big swings. you should also balance that going full circle here with companies with different types of risk, different types of businesses, because if you take all of this binary risk and none of those hit, or you're not able to sell on secondary before, you suddenly just lost millions of dollars, and that's never good for anyone.
Wow. I mean, talk about a diverse portfolio.
Yeah. Well, hey, like I said, I think there are certain things you also get to write checks into as a personal investor that you would never get to write checks into. I mean, like I even I use an AI note taker, Howie AI.
Howie, we
Yeah.
use granola.
Yeah, I'm oh sorry, I also use granola. Howie does my scheduling. But I love Howie. I put a check into Howie. Is that remotely related to my thesis? No, it's not. Like that's not, but it's fun. And I'm a small investor in GPT-0 because I knew the guys from college. Again, very responsible investment, not the sort of thing that like makes sense in a fund portfolio. And so you want people to know that if they park money with you, that you're going to deploy it in the way that you say that you're going to deploy it. And I think that's important too, and it's a layer of trust that's been lost. So that's the fun closing segments. I feel like we need an energy themed closer here. What have you got on tap?
Oh man, I was gonna do the opposite and
Okay.
talk about culture.
No.
So yeah, here on Energy 101 podcast, I'd love to keep talking about energy, but
All right, we're gonna end on something else.
I just love traveling and comparing cultures so much that I want to get kind of the scoop of why you're here in LA.
Oh yeah.
And like you mentioned earlier, you love Texas, you love oil and gas, you even love Midland. Like you go there, you get on a flight to Midland, you're like, hell yeah, let's go. Like
Dude.
that is not something you were the one of anyone ever to get on a plane from LAX to Midland and think that.
I think Colin loves the Midland as much as I do. I will go on that record. Yeah. Okay. Why LA? So here's the problem. As a venture capitalist, you basically have three options for where you get to live. And three is a strong word, where LA is on the fringe, where you can make an argument that I shouldn't be here. And it's really New York, SF. SF, if you're doing anything that is not fintech, financial related. LA, media, absolutely for venture. But the main reason for this is you want to live someplace where people go through normally, where they're normally in town for work, and you can have them come to you instead of you having to come to them. LA is emerging in that category for doing deep tech, for doing hardware, for doing robotics, for doing all of these more complex technologies because of SpaceX. People come here to recruit. People come here to, watch launches. They will come because there's an increasing El Segundo movement, right? I think all of that's a very bullish signal for LA. I also think SF just sucks. Like SF is the worst city you can live in as a VC because you're surrounded by other VCs. It's hyper competitive. You get caught up in this little bubble where you think that the reality is startups and tech, but it really isn't. LA is still a very real place where there are different cultures. There are lots of things that are not tech. I was like out Friday night with one of my friends. He teaches film at a high school here. And those are people who you can be friends with because LA is also pretty low judgment. Again, outside of like the influencer communities and whatever, but like low judgment, low drama, good place to live, good airport, very central. If I were in Texas, there's no startups there. Nobody comes through Texas unless you're in energy, pretty much. Like you're not going to Houston for fun for the weekend. Same deal. I grew up in Denver. I would love to move back to Denver. People do come through Denver, but they're going up to ski, and you're not going to be able to catch them for work meeting on their way to their ski trip. I'd love to move internationally, but same deal. It's like people don't really come through Singapore, and if you're investing in U.S. companies, you shouldn't be living in Asia. So here I am for now. I've debated moving back up to SF because I did live in SF.
Yeah.
I've thought about moving back up. I've thought about doing another year or two. I am currently in conversations, and we will cut this probably. We don't need to cut this. To get a Great American Venture Capital road trip sponsored, where I do all 50 states in 50 days, and do an event in every state. If that ends up getting sponsored, I will be moving out of LA for sure. And then there will be a question on the other side of that if I come back to LA or if I go somewhere else. And it's realistically for me, it's LA or SF. I hate New York too.
Yeah.
I actually, sorry, I shouldn't say that. I hate New York from a work perspective. I think the startups there just don't fit the same culture and the same ethos that they do on the West Coast. And it's also very far from Asia, where I spend a lot of time for other activities, like both, when you're building a firm, you end up fundraising a lot, but also just network and relationship driving. So New York's tough on both of those sectors. I love New York as a city. I think the food's great. The vibes are fun. One of a few places I've been out clubbing until like 6 a.m.
Wow.
Yeah.
Young blood.
Yeah. Back when, you were a kid, we too could have gone out clubbing until 6.
New York's interesting. We have Colin and other sales guys flying out all the time around the
Yeah.
country, and like New York is like never said, but it is huge for raising money. Like, does New York just completely not touch oil and gas or energy as a whole in general?
New York touches whatever will make money, I think. And this comes from the institutional side. There are a ton of rich people in New York who I personally know in some cases who do allocate to oil and gas, who come from the oil and gas industry and live in New York now or live in Connecticut and work in New York, right? But from a tech side, 100% not, right? There's no reason to. You're not near, I mean, what is the nearest ore body? You're probably, Pennsylvania is like the nearest real place you'd be getting gas out of. So that's 5-6 hours away. Like,
Yeah, you can't even frack in New York. I mean, talk about
full
regulation.
state,
Yeah.
I mean, not that you'd want. I don't think you'd want to. Yeah. No, I mean, like, look, you're gonna be better if you're doing energy to be in Toronto than New York if you're already up in that part of the country.
Now it's a take. I like that.
I fucking love Toronto. Poutine, underrated. I think people French fries with sauce is like the greatest
More of a
combination.
Montreal thing.
And it's big in Toronto too. Trust me. The mining company I invest in Toronto, so I'm out there twice a year probably.
Nice.
And that's
And you eat the carbs.
I basically only consume
Potatoes
poutine
with sauce.
and cheese.
Hell yeah.
Just a little bit of protein.
All right, let's wrap it up with similar questions. So, Austin is like a city I've
Yes.
grown and lived in and like a lot. I do smell the bullshit when it comes to Austin,
Yep.
so I've no problem talking shit about it or like saying Houston's better, and I'd agree in many senses. But they seem to have a legitimate like Silicon Valley 2.0 building there.
Yeah.
Houston's kind of like they have this slogan where they love saying they're energy capital of the world, which is like it's more like Texas is the energy capital of the world, but
Texas,
don't tell Colin I said that. But it is true. It's really exciting watching these cities grow, Texas grow, and like Texas is going. Everyone's like California is like the 10th largest economy in the world as a state. Texas is going to crawl up there any day now. So just end it off with some good talking points about Texas, Austin, Houston, this bubble that's growing. What's going on?
All right, so let's break this down, and we'll go region by region because I think as a VC at least there are 3 parts of Texas that matter: Austin, Houston, and Dallas. People go to Dallas to raise money. They're all the family offices for whatever reason, all out in Dallas. That's where you go through. Houston, if you're energy related, you're oil and gas related, or if you have that network of people, or if you sell well to that network of people, right? You go down to Houston to either raise money, in some cases to find startups. The government puts a decent amount of money into like clean tech development, energy transition, etc. Austin, I'm going to talk some mad shit about Austin because I think that the Austin tech wave, Austin is Miami from 3 years ago, okay? Where people tried to make Austin a thing and Austin did not become a thing. And basically what you see happen is during COVID, everyone was like, I should live someplace nice with low taxes. So you saw a lot of people go to Tahoe, they lived across the border
Nevada.
in Reno and, or lived across the border in Reno in some cases. You saw a lot of people go down to Miami. You saw a lot of people go to Nashville. You saw a lot of people go to Austin. Austin doesn't have a tech ecosystem. Austin has no tech ecosystem. Austin has 8 VC. And I will give Joe his credit. Like, in my opinion, love the guy or hate him, Joe Lonsdale is arguably the greatest investor of the modern era in venture capital. And he's based in Austin. He puts a lot of money into stuff in Austin. They run a ton of programs out of Texas. He's, creating the Texas University of Austin, I think is what they're calling it, etc. You take Joe out of the picture in Austin, there is nothing. I can't name another VC firm down there. I can't. You take away the VC portfolio companies, I can't name another.
Capital Factory.
Yes. Sorry, I shouldn't laugh. They're nice guys there. But it's a very different model. Like it's a incubator accelerator model, which is
that's literally all I could think of.
Yeah, no, but it's like okay. So you take away 8 VC, you take away the 8 VC portfolio, which is the like base power. I'm trying to think who else is down there. That's the big companies.
Yeah, I know nothing.
No, Base is by far the biggest in Austin right now. I think Radiant Nuclear may have an office down there. There's a little bit of nuclear activity. Again, all of that's AVC related. You take AVC out of that equation, there's nothing, right? Now you go to San Francisco, and in one block, I'll show you Lightspeed, Kleiner Perkins, you know, Khosla. You'll have the 10x the AUM of AVC in a block, and that's like people are going to try to make it a thing. People love to try to make these tech weeks a thing. Even LA, right? Like it's nowhere near on the same level of San Francisco. It's nowhere near on the same level of New York. But you can recognize that and recognize what your advantages are. I've always been a believer that being close to energy, if you're going to invest in energy, is a good thing to do. Easier said than done in some cases. For me, LA makes sense because I get a lot of the other deep tech around here. I get a lot of the other hardware, a lot of the robotics. I'm near my university because I went to Caltech, and so you get a lot of that deal flow. If I were just doing pure play energy investing, pure play clean tech, Texas makes a ton more sense right now.
Yeah.
Also, I'm just gonna list off and say I think Taste of Texas is the greatest restaurant in America.
Really?
And yeah,
that's right by the Collide Studios.
Is it really?
Yeah, it's in Memorial.
No kidding.
Yeah. The big steakhouse, right?
Yeah, of course the big steakhouse.
That's kind of a safe take, but okay.
I don't think it's a safe take because like if you're in LA, people are gonna be like, oh my god, no, you have to go to Vespertine, or like you're gonna stop in the French Laundry, and no, it's a Taste of fucking Texas. There's nothing more American than walking in there at Christmas time. You've got the Christmas decorations up. You go in the back, you select your, 4-pound cowboy bone-in ribeye. They grill it up, serve it with slides, and then I got a hot chocolate that was, I don't know, had some type of whiskey in it, and it was in a glass shaped like a boot. Like, there's nothing in the world that's more American than Taste of Texas. Like,
I love that.
It's America core. It's like if you go to an American bar in Japan, that's like
yeah. They did a good job in the Ted Lasso, that soccer show when they had it like one in London, and it was like
so funny enough, I've tried to go to American bars in London. Not a thing. Not a thing. Because I make this point of like, I love themed bars. I love tiki bars, and feel free to cut this. I've been to a lot of tiki bars in my time. I've been to a lot of like Western bars because I think that the Western bar is a funny and amusing tradition.
Like a dive bar?
Like I like shitty country. Yeah, because I was in the UK.
Yeehaw.
Yeah, I think I was in the UK. No, I was in Singapore. I was in Singapore during the 4th of July. And I was like, well, if I'm going to be here, I've got to do something patriotic. I went all over Singapore, couldn't find a single fucking bar. And then I was in the UK after that, tried to find one in the UK. Could not find like a trashy American bar with line dancing and like Coors Light. Now Japan does have this, and so, but I'm saying that's what Taste of Texas is. It's what people want to think America actually is, but like America instead is like not as much fun as people would say. And so Taste of Texas. If you're in Houston, Taste of Texas.
Yeah, I love that endorsement.
Yeah,
hell yeah.
Yeah, that's my only endorsement in Houston. That.
That's
and,
good.
Laurel Barbecue, the place that spun out of Franklin's, they make a great brisket.
Boom. There it is. All right, Andrew.
All right. Good
Cheers.
stuff, man. Cheers.